Chukuma Anyanwu, Head Research at GTI Securities, joins me now to take a look at the markets and flashing the numbers. A good morning to you, Chukuma. Thank you so much for coming through.
It's great to be here.
Well, let's talk about those numbers. How much impact will the bond auction have on the interbank? Today, the DMO is going to be doing a bond auction, which, of course, are reopenings of previous issues.
Harriet, I think the major thing that a lot of investors will be looking at who play the fixed income market will be inflation. The fact that we see a consistent rise in inflation figures is a major disincentive for a lot of the fixed income investors. Bond investors naturally would want to ensure that their short-term positions is sustained, and inflation is a major value eroder for their returns on investment. So the major thing that I think would play out on the fixed income market concerning this new auction will be some apathy, and I think it will be adduced to the fact that inflation has been on a steady increase, and that's a major concern for investors. Right.
So will the bond auction have any impact at all on the market?
Well, not necessarily. Well, naturally, of course, you would see some investors, the yields are compelling. You would see the fact that, like you mentioned earlier, yields have been widening, particularly from the short end of the market. Mm-hmm. You know, but that said, like I pointed out earlier, the major reason why we've seen a widening yield is the fact that naturally bond prices are coming down. So investors are particularly worried about the fact that the outlook for inflation is very high. I don't expect any particular. Also, if you look at the fact that our bond market is largely characterized by banks and some foreign investors, and exchange rate risk has also been a major worry for a lot of the foreign investors. So yeah, what I see is the fact that we would see a market that will be determined by what the outlook for the inflation numbers coming on very soon, and from the antecedents we've seen, bond inflation yields, inflation rates have been up, and the fact that we've still not done something particularly decisive about our exchange rate. So the exchange rate risk is still a major component. So I think those are the dynamics that we'll be seeing. I will not expect any major impact, considering the fact that from what we've seen from the CBN policies to recently brought out, you know, to ensure that exchange rate is held stable. You've seen major liquidity tightening on banks. So I will expect a lot more activity to be geared towards interbank rates. I think interbank rates will be more attractive for a lot of the banks now. So they will not be looking at too much exposure, considering the fact that most of them have already taken a major hit on their bond exposures, with bond prices on the short-term end of the market coming down. A lot of them will not be too optimistic with further investments into fixed income as we speak. So the interbank market for them is a more viable option, I think, Harriet. Okay,
so the National Bureau of Statistics has released the headline inflation rate for July. It's a breaking news story here on Channel's Business Morning, and it's unchanged. It's held at the same rate for a second consecutive month at 9.2%. We'll be talking later to the technical advisor to the Statistician General to flesh up these numbers and give us a summary of the rates for July. But how much impact? You've talked about the fixed income market. How much impact is this going to have on the equities market?
Oh, all right. There have been particular macroeconomic challenges on the equity space as well. A lot of the foreign investors have decided to take a wait-and-see approach, even though valuations are very attractive for some of the stocks. For a lot of the stocks, if you look at banking stocks, a lot of them are trading at price-to-book value multiples of less than 1. For the top-end banks, you will also see that people like GT Bank and historically paid interim dividend. So there has been, and the fact that we've had this level of attraction in the equities market and still no major rally means that the major key investors in this market are still taking a wait-and-see approach. So if you ask me, I think what would be prevalent across all asset classes, both the equities and the fixed income, will be a lot of people taking short-term positions, trying to ensure that the inflation risk, which a lot of people have been worried about, is curtailed. And the fact that the capital market hasn't, despite the opportunities, hasn't really seen any major policy that would trigger an upsurge in price movements for a lot of the stocks, then I do not really expect any major impact. I think what we'll see will be people holding firm to their investments and just trying to see how policy direction changes, and subsequently going forward, that will determine what strategy they will be using to invest across Nigerian assets. Harriet.
But then, apart from the fact that the market is waiting for policy directions, we actually see some companies turning in their results for the quarter, although not as impressive as they would have wanted to, because like you mentioned, strong headwinds for most of those companies listed on the equities market. But there's still some results that the market is hoping for. So looking at yesterday's trading position, the market's key indicators actually closed south. Do you expect to see a turnaround if some sort of direction comes from major blue chip stocks, for instance?
Harriet, the thing is, I know that a lot of companies are trading well below valuations. I would not say so for, I think companies like Dangote Cement have a lot of headroom for any investor who wants to take advantage. I also think that Julius Berger at this price is attractive, and those are the kind of stocks, you know, that have a way of shaping the direction of the market. You know, but I think what we've seen from particularly companies that are in the consumer goods space have been largely characterized by the fact that exchange.
Well, we seem to have lost connection there with Chukwuma. But he was trying to give his analysis on what to expect from the market. Yesterday, the All-Share Index lost about 0.50%. It feels that the markets are still very liquid, hoping for good direction from Dangote Cement and Julius Berger. These are stocks that he knows continues to give market some form of direction, of course, as well as some other blue chip stocks. But Chukwuma Anyanwu was the head researcher at GTI Securities. Now, the breaking news for the markets at this time: headline inflation remains unchanged at 9.2%. Ifeanyi Isikwe, technical advisor to the Statistician General of the National Bureau of Statistics, joins me 2 minutes from now to analyze the numbers. Please join us again.